everyone, welcome to Money Talks. My name is Mark Dooley. You are in the Next Gen Money Coaching Studio here, and I'm excited today because I got a lot of great positive feedback from our last conversation, what we talked about last week, which was credit scores, how to impact them, what a credit score is, what does it mean. And for those of you guys who didn't see it, go back and watch last week's video. It was a very, very informative video about basically what a credit score is, and it's how likely the bank is going to make money off of you. So I had some follow-up questions that came in that said, well, what if my credit score is not where I want it to be? What are some tips and what are some tricks that I can go through to help raise my credit score up? And that I refer to it as the money game. You have to understand that the credit reporting companies out there, they're playing a game. There's a credit game that's occurring right now, and either you know about it and you know how to play it, or you don't and you're stumbling kind of through it, whether you're doing well or not. So rather than accidentally doing well or intentionally doing well, let's transition now to being extremely intentional about what our actions are going to be. And that's what we're going to do. We're going to learn how to play the money game today. We're going to work together and break it down step by step. We're going to start by looking at our chart. Let's see here. We're going to start by looking at a chart here of the different FICO scores. And this is really this is the major question I keep getting asked. How do I get a better credit score? Mark, I want a better credit score. I want to get my credit score up. If you already have a great credit score, you probably have been doing some of the things we're going to talk about here today. But I'll throw some tips and tricks in for you guys as well that maybe, you guys are already where you want to be. The credit score range in general runs from 350 to 850. If you're up over 680, 700, if you're up over that, you can pretty much get every loan or credit card or whatever it is you want out there. If you're over 750, not only are you going to get it, but you're probably going to get some of the lowest interest rates off there. I'm not going to go over all those things. If you want, look back at the last video. It talks about what the score means and how likely the bank's going to make money on you, all that stuff. That was last week. Check that out. Definitely look it up. Let me know if you like. If you have any questions or comments, send it over to us. But for today, we're talking about how do you get a better credit score? How do you play that credit game? And we're going to walk through this step by step. There's 5 categories here. And the first one is payment history. This is a very obvious one for most people, but I'm going to come out and say it. If you pay your bills on time, you're going to have a good credit score. 35%, that's is going into it. A third of your credit score is making sure that you pay your bills on time. Now, what does on time mean? What if I'm a day late? What if I'm 5 days late, 10 days late? When does it report? And what does that reporting look like? If my due date is April 16th and I pay my payment on April 17th, does that report on my credit? In most cases, no, it won't show. What will happen is your lender will tag you with a late fee. They'll charge you a fee, but they're not going to report until you start getting 30 days late, 60 days late, 90 days late. You start getting further and further out, and then that's when they start saying, well, you know what? We need to start telling somebody about it. The credit report is your public. It's like your report card for other banks to be able to see, okay, how did he handle this bank? How did she do with this bank? What's going on out there with your credit? How have you reported? Because again, this is what banks are going to use for you to be able to get money from them. The only reason they're going to give you money is they need to know that you're going to make money. They're going to make money off of you. And so they need to know that you make your payment. If your payment's made on time and it's made within 30 days of the due date, no harm, no foul. It's not going to ask, did Johnny make his payment on time? It's going to say, was Johnny late? Was he 30 days late? Was he 60 days late? Was he 90 days late? And if you look at an actual credit report, it'll have green check marks all the way across the board, except when something is bad, then it'll have a 30 or a 60, and that will let them know that this is on here. Now, mistakes aren't final. Things can happen on there that if you have something negatively reporting on your credit report, you can always do a dispute. And that's for a different video. We're not going to go through trying to fix or repair credit here today. But I want to let you know, if you have a 30-day late, you can ask the lender to remove that off of there, especially if you brought it current. If you've paid their late fee, if you've done everything they've asked, you can ask them. And a lot of lenders will be, okay, we understand. Life happens, things happen. You can take it off. You can actually change your payment history. If you have a closed credit card, let's go down this path just a little bit here. If you have a closed credit card, you can file a dispute and say, hey, I didn't have I wasn't late here, or here was why I was late. You can put explanations on there, and you can get some of those things pulled off your credit report. The lender has a certain amount of time to be able to dispute it, but if they don't follow up, if they don't do anything with it, you win by default. The two sweetest words of the English language: default. It's a Homer Simpson reference for everyone that doesn't know what I'm talking about there. So payment history is the biggest factor. Pay it on time, pay it within 30 days of when it's due, and you're going to be fine on there. The next one is the amounts owed. And this one's a little bit tricky because people think, okay, well, the less I owe, the higher it's going to be for me on this one. I'm going to have a higher score based upon that. And it's true to a certain extent, okay? And I'm going to break it down into some very simple categories here. If you owe more than 50% of your credit limit, so like let's say you have a $1,000 credit card, okay, and you owe $500 on it, you're basically getting a C. You're not failing, but you're not doing great. You're getting by on that. If you're at $900 of a $1,000 card, if you're all the way up there, it's going to ding your credit. Now the nice thing about it, when I say ding your credit, is how do you fix it? You pay the card down. If you get the card down to $100 to $500, it's like that $900 balance was never there. It's a snapshot of where you were at the time when the statement was drawn. This is one of the easiest ones for us to fix. If amounts owed is what's causing your score to go down, this is the most hopeful thing, because all you've got to do is pay down balances over time and your credit score goes up. You don't have to do any disputes. You don't have to fight with anybody about it. You're just going to pay it down. But here's where the trick comes in. Here's the sticky part about it. You think, okay, if I have $100 on my $1,000 card, I'm getting an A. I'm using a little bit of my card. I'm using 10% utilization. It's good numbers, a good place to be. What happens if I'm using 0? Well, if I'm using 0% of my card, the bank can't tell how responsible I am with it. It's basically the same as having $500 on it. 0 is the same as a C. 10%'s an A. 50%'s a C, 90%'s an F, kind of giving you a framework of what that looks like. And guys, there's so many different opinions about credit, about how this works. There is no like one set way. CreditKarma.com is a great website out there if you're wanting to really dive in deep and figure it out. Because different banks have different requirements for it's called credit utilization, what I'm talking about here. How much of your credit card have you utilized and the amounts owed on there. The other side of that amount owed is your debt to income. Now, this won't apply too much for credit cards, but it will apply for car loans and home loans. Amount owed, not so much as in the balances that you carry on there, but your balances is in proportion to your income. There's only so much that you can make payments on and still be able to make payments. If I make $1,000 a week and I'm paying $800 a week out in payments, the odds of me being able to maintain that payment is not very high. I'm going to need to talk to the credit card company. I'm going to say, hey, I need you to change this thing out. I can't keep making this payment. It's too much. It's too high. Which means that either A, they're not getting their money back, or B, they have to change their interest rate, which means they're getting reduced amount of money on there. They don't want that. They don't want to see that. So what do they want? They want to see you having a good debt to income. They want to make sure, and this is, again, relative depending what you're looking at. A home loan, you're talking 20 to 25% of your income. An auto loan, I've seen auto loans go up to 80% of your income. And that's your total combined debt, all of your debt together with the new car loan payment in there. So different rules depending on what you decide to get, but amount owed is huge for impact on there. So outside of paying your bills, if you pay your bills on time and you owe just the right amount of money, I don't want to say you don't owe any money, because you have to owe some people some places in order for them to be able to establish a credit score for you. If you do those two things right, you are 65% the way home. You're 2/3 the way home to having a great credit score. The third one on there is the length of credit history. But unfortunately, this is father time. There's not a whole lot you can do about that. If you are just getting established, or if you're reestablishing after having an issue come up in your life, there is not too much more you can do than just simply open cards and get credit established. But what they're going to look at is the average length of credit history. So here's where I watch people kind of like get snagged on their credit score. They have one credit card they've had open for 10 years. Okay, their average length right now is 10 years. Then they go open a new credit card. Now they have one that's been open for a month and one that's been open for 10 years. Their average length is 5 years. Then they go open a new credit card and an auto loan. Now they've got 3 that are open in the last month and one that's 10 years. Throughout that process, they've now decreased their average age of their credit lines down to 2.5 years, because they have 4 lines open with an average age of 10 years. It's now hurt that, even though their oldest one hasn't changed on there. Again, it's a game. We have to learn the game. We're working through the game here. What you think about this is like, okay, I need to know if I'm going to use my credit, how is it going to impact it? And this is where, there's a lot of boogeyman stories. Well, if you go open a loan, it's going to drop 50 points. It's going to do, it's not necessarily what's going to happen in the first, 2 months, but look over the next 6 months, over the next year, what's going to happen. If you go open 3 lines right now, your average length is going to hurt. It's going to drop on there, but you're going to increase your amount owed, or sorry, your available credit. There's other areas where it's going to impact you to be able to do that. But just know right off the bat, you're going to get you're going to have a credit score drop. We're going to jump back. Think about amounts owed for a second. If I have $1,000 limit and I have $100 on the card and I pay it off, my credit score is going to go down, because I went from an A to a C in that category. People go, wait a second, I paid off my loans. Why did my credit score go down? Because based upon your new information, the bank's trying to determine how likely are they going to make money on your money. If they don't feel like they can make money, they're going to give you a lower credit rate, so that way they can charge a higher rate of interest, because in their mind, you're a higher risk. It's just mind-blowing sometimes for some of us, because if we don't get the credit game, if we don't understand that there is a credit game and how the credit game works, we go through and we pay everything off, we close everything out, and we think, oh, well, man, I should have a good credit score now. And now they're back down at 620, and they're basically like a college kid. You go, wait, what happened? Why did it happen? It's because you killed your length of credit history. You killed your amounts owed. You've worked it. Maybe you've closed cards that had great payment history for you. You can't keep working through that and then expect to have the score when you're not playing by the rules. The rules are different when you're trying to have a good score on there. So we have the length of credit history. We have the amounts owed. We have the payment history. The next one on there is the credit mix. So there's 2 types of credit out there. There's installment and there's revolving. Installment is like your car loan, your home loan. If you have even a payday loan, a personal loan, any of those things that are fixed. So they have a fixed loan amount, and you are making installment payments over time. That doesn't mean the interest rate is fixed. The interest rate can still be variable. I can have a variable rate on my home, but it's still called an installment loan, because I'm making a fixed, I have an installment, a fixed number of installments. I make this payment over this much time, and that loan is paid back. Revolving is the opposite. This is more like a home equity line of credit or like a credit card. When you have a revolving line of credit, it means you can put a balance on, take a balance off, put a balance on, take a balance off. So think of it this way. If I borrow $10,000 to go buy a car, and I'm going to make that payment for the next 5 years, let's say it's $200, $300 for the next 5 years. At the end of that 5 years, the car is paid off, the loan is closed, so that becomes an account that's no longer open, and the account's satisfied. If I have a $10,000 line of credit that I max out and I pay off over 5 years, and then I have it still open, that it still is available there to me. The bank wants to see a good mix, though, between fixed installment payments and variable revolving payments. You have to show both on there, and now you have to look. It's 10% of the score, okay? So if this isn't a priority for you, if you don't want to have a car loan, if you don't want to have a mortgage payment, if you don't want those things, that's fine. Just know you're never going to get, well, I shouldn't say never, you're probably not going to get up over 800, because you're punting 10% of your score. Okay, you're just saying, oh, that 10% is not important to me. I'm okay with my couple credit cards. The final one on here is new credit. And this is where people really get protective of their credit, because they go, oh, well, don't check my credit, don't run anything, don't even look at it, don't breathe on it, because it's going to go down if you do anything with it, which can be true and cannot be true. If it's like a pre-approval, like you're going to go look for a new insurance, or you're going to go look for go apply for not apply, but go get a cell phone. They're going to do something that's a soft check on your credit. They're just going to basically, like when you get a pre-approval letter in the mail, they're going to look to see, okay, based upon public information, is this somebody we'd like to consider making an offer to? That is not a hard inquiry. It's called a soft inquiry. It's not considered a new line of credit because you didn't ask for a credit card. You didn't ask for a loan. You weren't asking for credit. Now, when you go to the credit card company, when you go to a Chase or a Citi and you say, give me this credit card, I'd like to apply for this credit card, whether you get the credit card or not, the inquiry hits. So this is where people get, wait a minute, Mark, I don't want to get declined for a card. Well, if you apply, whether you get approved or denied, the impact to your credit is the exact same. It's going to show as an inquiry on there. And where you really, credit's designed to be used, people try to protect it where it's like, okay, well, I don't want to do more than 1 or 2 inquiries a year. And that's like AAA level. Okay, you're not using a lot of inquiries, you're not doing a lot out there. But I know people that are in the high 700s that do between 5 and 7 inquiries a year. They're rewards point junkies. They're jumping from this department store to that department store. They're always finding a way to do it. And because of that, they're never really hurt. Inquiries fall off after only 2 years. So they're not staying on your credit report forever. So if you're careful with it, if you know where you're going, you can withstand to take 3 or 4 inquiries a year. You can withstand to take 5, 6, 7 inquiries a year, especially if you're good in the other areas. If you're not, like let's say you don't have a very long credit history, or let's say maybe you have missed a few payments, well then you got to protect those inquiries during that time until you can get all that cleaned up and you can work through it. As you play through this game and you start saying, okay, you know what, I got my new account set up the right way, I've got my credit mix set the right way. There was a blog post out there called Chasing 850, and it was about a guy who tried to play. He was an older gentleman who was retired. His life's mission was to get an 850 credit score. So he had to play the game. He had to take loans out on things. He had a $2,000 loan on this. He had a $10,000 loan on this. He had the cash sitting in the bank to pay it off, but it was a priority for him to get an 850 credit score, something he always wanted to do. And so it takes time, and it took him about 2 years from the time he decided to hit the goal to the time it took him to get it. Just to get, and for those of you who don't know, 850 is the highest score. He wanted to get that 850 score. And it took him time, but he eventually got it. He was able to get that 850, but it took him 2 years to hit that. And the reason why I bring this up to you is we talked about last week that, when we go to apply for credit, it's like talking to the great all-powerful Oz. It's like, oh man, there's this big smoke and fire, and there's a green guy up there. He's like telling me, oh my gosh, I'm the great powerful Oz. If you want something from me, you have to go, do this crazy task, go kill a wicked witch, go do all this stuff. And then even after that, come back tomorrow. We'll see. For those of you guys who have ever tried to get a refinance through the mortgage company, sometimes through a traditional bank, it sometimes feels like that. Go do all these things, bring me your tax returns, bring me all this, and then we bring it all to them. They go, great, come back tomorrow. I really think that was based upon the banking system. But I digress. We're not talking about the Wizard of Oz today. We're talking about you and your credit score and how to improve it and how to increase it. And the reason why I brought up the Wizard of Oz was because that is our perception of credit. If we don't understand how it works, we live in this quasi, I don't want to say fear, but like a better word, fear of using our credit because we don't really know what's going to happen. It's kind of like getting a brand new toy on Christmas morning and you're looking at it and you're like, I don't want to break this thing, but I'm pretty sure this piece goes here. Okay, I'm going to do this. I'm going to play with it this way, but oh man, I'm so nervous. I don't want to break it. Mom and dad will kill me. I begged for this for years and they finally got it for me. And now it's going to break. Like, we can't be afraid. Credit's designed, I hate to say it, like credit's designed to be broken and it can be rebuilt. There's not anything with it that is completely damageable forever. There are people that recover from bankruptcy. There are people that recover from foreclosure, from defaults, from different things that occur, from medical collections. All these things can be recovered, can be restored. And if you have negative things out there, if you have some of those negative things on your report right now, you can go through and do disputes on them and say, hey, I don't want this to be on my report anymore. I don't want this to be out there. If you're going to make a settlement payment to a company, you get it in writing that it's considered paid in full and will be removed from your credit report prior to making that collection payment. You got to get these things in writing. But the credit report, we have way more power as consumers than we're taught. from the banking system, that we're taught from the people that are trying to sell us loans. They want us to think we're powerless. We have way more power as consumers, especially with the CFPB, was it Consumer Financial Protection Bureau. There's these things out there that are designed to help us and get us to where we want to go. So I hope this was helpful. I hope this was beneficial. There was a lot built into a very short period of time here for you, but the credit game is so important to understand. I don't want to leave you in the spot where you're stuck wondering, oh man, was this right? Did I do the right thing? A lot of us end up with that. We end up with these questions, and whether it's about credit, whether it's about budgeting, saving, investing, there's all these different money questions. And I want to give you guys a resource to be able to use. And that's this show. I want to make the show available to you guys. Send me your questions. If you'd like to come on, you want to do an interview, you want to talk about it, I'm open to doing that as well. We'd love to have you guys here and have a more engaging conversation. But if you're also someone's like, look, I want to know more about this, I just don't want people to know it's me that's wondering about this, send it to us. Just give us an email, send it to moneytalks@nextgenbudget.com. We'd love to answer your questions. I want this show to be based upon what the questions you guys have and getting the answers out there. So thank you so much for joining me here today. And we have a belief here that we are called to do good with money, and that looks like jobs and better jobs, raises and bonuses, positions and promotions, provisions and resources, checks in the mail, finding money, debts paid off, so that you have more than enough to dent the universe in the way that you were called. Thank you so much for joining me here today. I will see you guys next week on Next Gen Money Talks. Have a great day.